All right, traders, in this first lesson, what we're going to do is bring context to chaos using the swing ID method. Guys, this is finally a method that anyone can use to identify important market movement quickly and easily. So, what do we mean? Well, when you look at the market, you need to be able to understand what's going on, right? You need to be able to know, what movements are important, what ones should I be paying attention to, and one of the ways that you've probably seen or have been taught is maybe to draw your line tool and just follow the market. And you're told to do this to train your eyes so that way you can do this without drawing in real time, or even draw in real time, whichever. Either way, this is probably something that you're taught or have attempted to try or told that you should do, and you're thinking to yourself, well, how do I know where to draw from? It's fine when I see you do it, but I don't actually know where to start or what moves to look at, or how do I bring context to the chaos that I look at when I look at a price chart? Because sometimes it can be really confusing about what's going on. We start chopping back and forth, especially in areas like this. You're thinking, well, where do I draw from? Nothing's really happening. We're going sideways. I don't know what to do. But when I see you do it, it's so easy. How can I do this too? Well, that's exactly what this lesson is about. So the easiest way that we can do this is to put on a standard indicator that everybody has called the swing indicator. Now you're going to see a bunch of other stuff here in my platform, but I just need to find swing. There it is. Swing. Okay. So all we need to note here is that I'm going to use a 13 period strength. So 13 is my strength. Usually the swing indicator only has one input setting. In this case, I'm going to use 13. That's a Fibonacci number. I like to usually stay near or around Fibonacci numbers when I use indicator settings. But strength 13 is where we'll start. You can even use 8, or you can use 21, or whatever. Just understand the lower you go, the more swings the indicator will put on your chart. Or if you go higher, the less swings, right? So you'll look at bigger moves, and if you put a smaller number, you'll look at more detailed movement. You're probably saying to yourself, well, how does this help me? Well, here on my chart, I'm going to have red and blue lines, okay? Swing highs being in red, swing lows being in blue. And one of the important things to note about how a swing indicator works, or any indicator that seeks to measure swings or high and low points in the market using a bar count method after a high or a low is identified, is going to be done in a certain way. The reason you need to know that is because in some cases a swing may not be there in real time. Again, in real time. So if you're trying to look at historical charts like we are right now and determine a trading method, you need to understand how these indicators work so that way you don't create signals that don't exist. Okay? For example, let's say, well, if the market's at a swing, or if there's a swing there, then I do this. For example, the market comes down into here, there's my blue swing. Well, careful. What we need to know is how the swing indicator works, that way we don't self-sabotage ourselves. So we see here that a low point is identified in the market. Let's see, chart marker, arrow up, right there. Okay, there is a low point identified in the market as it retraces. We'll get into how to use the swing indicator in a minute. But there it is right there. There's the low point. What was our strength? 13. Which means we need to count 13 bars ahead, and there also needs to be 13 bars previously for us to generate that swing to be drawn. The most important numbers as we count forward. So here's 0, 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13. So right there is the 13th bar after the low. It's identified, and depending how the swing indicator is configured, sometimes it'll read the low or the high as the first bar, which means that 13 would be back here. Kind of depends, but in most cases it's going to be here's bar 0 and then 13 bars after the low or high. Here's the low, here's a high, count 13 bars. That's because that's what my strength is set to. So right there, when this candle closes, this swing indicator would have printed. Printed meaning it would show up on my chart in real time. So you need to understand that that swing indicator doesn't exist as the market moves down here. It exists way over here, which you can see that we create that level and now we're far away from it. So the swing doesn't actually help you in terms of making a trading idea. I just want to outline, that's really not important for what we're going to use it for, but I want to outline how not to use it so that way you don't make that mistake and create trades that don't exist in real time. And you're like, well, there was no swing. What happened? Well, that's why. Okay, that's how the swing indicator works. Now, moving on to how you use the swing ID to finally identify important market movement quickly and easily. So here's how we do it. Anytime, now we just talked about how the swing indicator may not appear in real time, right? However, anytime you see the market close beyond, or in the case of the swing indicator, even wicks count usually, we push through a swing high, in this case, or a swing low, like right here. If the market moves through that level and it stops printing, price goes through it and it stops appearing on your chart, stops plotting, right? Right there, it stops. That swing level was present in real time, okay? Without a doubt, there's no way around it. It was printing and price went through it. It stopped printing for that very reason, for the fact that price, a wick or a close, went right through it, like that one there. Goes through it, it stops printing, okay? So we know that that's there in real time, which is again where we need to focus our time when we're actually trading, right? So that's why I wanted to outline how not to use it historically and how you can use it historically to help you in real time. So, excellent. So all we need to do is what? Well, all you need to do to start is draw lines from the low point to a high point when you break through a swing level. And don't worry about in between here yet. Let's just draw the ones that break through. Anytime price moves through, here moves through a swing, close below. I prefer that we look at candle closes and not wicks. Like back here we have a wick below, but candle closes are more important when we start to talk about reading market structure, which is coming in the next lesson. All right, so let's see here. Here's a low to high. We broke through that swing. Here we broke through this swing. Let's draw from our low to our high. We can go from here, but let's just connect our swing points in history that we can see. Okay, let's do another low to high. Here we break another swing high, draw right through that, and here's current market conditions. Here we break through this swing, and then we break through that swing. Okay, you're probably saying to yourself, well, we're missing some stuff. You are correct. We are missing some stuff. Let's look at a down swing low examples. Really simple, guys, real simple. You can do this on your chart as well. If your platform doesn't have a swing indicator, that's not good. So I'm sure you'll have it. Almost every platform does. There we break through a swing low. Hey, there we break through a swing low. Break meaning we candle close beyond it. And here we also candle close below that one. So draw from there to there. Hey, look, we swing high, break above. Candle closing above. My up bars are in yellow. My down bars are in black. And then we chop sideways in here. Okay, and we don't actually break any swings until right there. And then we do it again. There. And now we're right back where we started. So the question becomes, okay, that's great. I can do that. Now, why did you have me do that? Well, what about all the stuff in between? We need to be able to identify something that you can count on, which means, like I said, the swing indicator, when price breaks through it and it stops printing, we know for a fact in history that was there, and we know for a fact in real time that will occur as well. This means you can test stuff, right? If you know it happened in history, of course it'll happen in real time, but if you can know that it happened in history on a historical chart, you can then create trading plans and test them and so on. So that's why I taught you how to use the swing indicator. Now all we have to do to kind of fill in the blanks is just connect the dots. Connect the points between the lines that you've drawn in the direction of the market that it's moving. Now here we just kind of chop sideways, so I'll just draw these in. Real easy, right? And then we just connect our points together. Whoops. Low to high. High to low. And we're just connecting our points there to there. Really easy to follow the market now that we have some context, like I said, around the chaos, which is pretty much the title of this lesson. And we'll just keep connecting the dots, high to low, as we continue to step up in this uptrend. Connect the dots, and now we're at current market movement. Okay, current market at the recording of this video. Do you see how powerful that is and how easy it was? All you need to do to start off is identify impulse legs, structure changes, places where the market closes beyond a swing level, up or down, swing high or swing low. Draw your lines through from a low to a high, or in the case of here, a high to a low, and then connect the points in between. And then as you start to get good at this, what will you do? Well, your eyes will preemptively see, right? They'll preemptively see the next impulse leg coming. I see the impulse. I know to draw from high to low there to create my retracement. And before you know it, you're just following market movement like nobody's business, right? You'll know exactly where to draw your retracements to before the next impulse leg, because your eye can see that the market is going to be breaking beyond those. And here we have a beautiful classic chart pattern, which we'll talk about in lesson number 3. There it is again, coming soon. Make sure you get into lesson number 3, and we can just preemptively just keep doing that. Our eyes can see the impulse leg ahead of time. We know where to draw from because our eyes are trained. Okay. At the end of my chart there, and there we're at current market movement. Okay, so you guys can do this. Take your chart package, whatever you're using, put your swing indicator on there, draw your impulse legs first, only when the market breaks and closes through a swing high, or it breaks and closes through a swing low, right? Candle closes. Then connect your lines in between and follow the market movement that way. And then as you start to get good at it and your eyes are trained, leave your swing indicator on, and then just try and draw in order, in consecutive order, right? Impulse move, break of structure there, retracement, and so on and so on. And before you know it, you'll be doing this in your sleep. And once you're doing it in your sleep, you won't even need to draw anymore. You might not even need the swing indicator anymore. And you'll still be able to draw those impulse movements because your eye has been trained. You might even start picking up smaller ones that you didn't see before. And you'll be that much further and even more steps ahead of the market and what it may do next. And there it is, right? You'll be able to do it that fast. Of course, you're going to need to practice. And you need to get your swing indicator on there, get your line tool out, start practicing this. But I promise you, if you do this, this will drastically improve the way that you read market movement. It's quick, it's easy. Anybody can do this with any charting package that has a swing indicator, and you'll be able to bring context to the chaos. All right, I'll see you in lesson number 2, where we're going to learn how to read market structure using 2 simple candlestick formations. Guys, it's never been so easy to identify potential trends before, that's right, before they even occur. I'll see you in the next lesson.